Pound dollar daily forecast, January 6, FXEmpire.com. The pound dollar pair saw a weak session on Thursday as traders came back to worrying about the European debt issues over the session. The pair looks very weak at this point, and it's worth noting that the most recent low was lower than the ones before it, and the most recent high now from a couple days ago is lower than the ones before that. This suggests that perhaps we are starting to tilt to the downside. We are still in consolidation, but it does look like we are trying to grind lower. The 157 to 158 level above is resistive, and we think that it should continue to be as it has been over the last couple months. The fact that we couldn't even get to that level suggests that the downside break may finally be coming. The question is why is that important? When you zoom out on the weekly chart, you begin to see a complex head and shoulders pattern. This head and shoulders pattern, if broken, and I have the neckline at 153 as it's the absolute bottom of support, as you can see from these candles, we have a move that suggests a little over 1,000 pips to the downside, or for simplicity's sake, you could just say retesting the bottom, the lows down here. The fact that this looks so weak and it looks determined to grind lower does suggest that perhaps this will be the move going forward. Of course, timing will be everything on this, so you have to watch it on the shorter term time frame, such as the daily. The upside certainly does look possible right now, with non-farm payroll being today, but the pair does tend to react favorably when jobs come out strong, as it is a risk-on type trade. But eventually, after the euphoria settles down from a better than expected job numbers, if we get one, more than likely we will see sellers coming back into the market aggressively at about 157. The European situation will not have changed with a strong U.S. job market, and money may actually start to flow back into the United States at an accelerated rate. We could possibly see news coming out of the European Union between now and non-farm payroll that could rock this pair, of course, as it can always take center stage. But the odds are is that this just simply will not happen. We are selling rallies in this pair going forward and would be aggressive sellers on a close below the 153 handle. If we get that pop from a good jobs number during the session, we suspect that right around the top here we would see sellers coming back in and would be surprised if we could break through.